Let's have a look at it. Okay, so the first thing we need to define for this particular section is, what is the statement of financial position?
Yeah.
What is the statement of financial position?
It has your assets
And
liabilities.
good, that's the key. Right, so the first thing that you can put there is net worth / wealth. Financial position looks at that. Net worth / net wealth. Right, so how would you determine how much worth or wealth the business has? You would have to look at two things, the assets and the liabilities. Okay, so next point, financial position looks at assets and liabilities. That's the focus, that's the key. Right, you'll see in the textbook they define what an asset is. You should know that, so I'm just going to ask you just to revise. What is the definition of an asset?
Resource control.
Perfect. Okay, a resource control that will give us future benefit. The examples in the textbook, premises, machinery, vehicles, computers, etc. That's what they've given you. Right, but all of those assets are going to give us information about what the business has in terms of resources. Okay, maybe underneath the word asset, you can just put a bracket, resource. Underneath the word liability, put a bracket, obligation. Just so you remember what the definitions are. Okay, I know you know it, but it's always nice to have good notes. Okay, perfect. Right, so liabilities are obligations, we just mentioned it, and those obligations have a future outflow of benefits. The examples in the textbook, mortgage, money owed to suppliers, what do we call that? Money owed to suppliers. Yes, okay, creditors, suppliers that sell to us. Right, then they'll say, for example, the liability of a local garage may be the money owed to the motor company for the spare parts. Right, they also talk about electricity. If we owe ESCOM for the electricity that we've used, that's an outstanding liability. Okay, so it's all basics, it's all repeats. You've seen this before. Okay, the last paragraph on this page talks about the statement of financial position. Okay, so what does the statement actually look like? We need to put a little structure together. Okay, so underneath this you can say format, and then let's draw it up. I'm going to use one of the examples here in the textbook just to show it. Okay, is this good disclosure? What do you think? At the top. Do you think this is good disclosure? What's missing?
The non-current and the current.
100%. Okay, so we need to improve on this because we've seen better disclosure questions. Okay, this is better. All right, there later on. That's good. Okay, so this is the one that I'll actually use then instead of that one. Okay, we'll improve that other one. All right, so format, perfect. Okay, so the heading, statement of financial position, that would be the heading for the statements. Right, what's the first section in the statement of financial position? Think back to what we've looked at previously. What would you start with? What's the most important thing for the business?
The assets.
Exactly. Okay, so you can underline that. That would be the heading. Then you'll have a section for the assets. And the assets section is separate from the equity and liabilities. Okay, so the first section in the statement of financial position covers assets. So big heading, you can even maybe use all capitals because it's important. Assets, right? Underline that and then show two separate lines with two separate headings. I'm not going to give you that many examples. We'll just put one. Okay, but just put a heading. Non-current assets, then underneath it you can just write land and buildings, just for just some recap. Okay. Subheading non-current assets, the example entry, land and buildings. Right, obviously you could have lots. You could have premises, shop fittings, vans, vehicles, machinery, equipment. There's a lot. Okay, you'll see many when you go through more examples, exercises. Okay, perfect. So you've got the word current. Underneath that, give me an example.
Rent.
No. Rent is an expense or an income.
I'm not thinking properly.
Try again.
Land buildings.
Current assets.
Bank.
Bank. Good. You can say bank is perfect. Maybe let's put two then. Let's put bank and inventory. Inventory is also a current asset, it's short term. Even debtors, if you wanted to, you could have put that one as well. Okay, but let's just leave it as 2, so we have enough space. Alright, then what does the structure do? What happens at the end? Good. So skip a line, put a big total, and write down total assets. Total assets. Okay, I'm just going to give you numbers to put in so this thing works out. Okay, put a big total, like 2 railway tracks across for the total.
I'm going to do the whole thing.
Yes, yeah, definitely. Perfect, okay. Alright, and then in terms of columns, we can use a double column system to account for it because I see they've used that in most examples here. Okay, so put 2 little columns for the totals.
All the way down.
No, well, yes, you can because we're going to look at equity and liabilities as well, so you can go all the way down. Perfect, okay. Alright, so let's put in some numbers. Buildings and land, or land and buildings, make it 100. Okay, so where would you put the 100 for the non-current? There as well. Good, 100. Okay, for bank, let's make bank 10, and let's make inventory 50. Okay, where would you put the total?
Yeah.
Yes, how much? 60, perfect. And then you put 160, there you go. Okay, you got it, it's nice. Alright, and that's how you account for what? The assets. Okay, next section. I see they haven't used the word equity, they've used the word capital. But the only reason why they've used capital is because this is a sole proprietor.
Okay.
Okay, so if you had a company, you would talk about equity. So equity is actually better.
Yes.
Okay, so rather use equity and liabilities. That's the heading. Right, it's the same as before. Put in capitals. So assets, same heading as your assets, equity and liabilities. That's the main heading. That gets underlined. Okay, main heading, underline. Right, then we're going to have a subheading. The first subheading will be for equity, obviously. Equity, you just write that word down, equity.
Skip a line.
Yeah, skip a line, write down equity.
Yeah.
Okay, what would you have under equity? Capital, yes. So you can put a bullet, capital. Right, there could be others. We haven't covered companies yet, eh? Companies come up much later. But you know it from last year.
Yeah.
Retained earnings, something like that. Okay, but that's all we're going to put for now. Okay, skip a line, heading, liabilities. That's the next section. Underline that, and then, do we have non-current to current liabilities? Yes, we have to show them separately. Okay, it's disclosure. IFRS says you have to disclose them separately. Again, we'll just put one example for both. Non-current and then current. Under non-current, you can say mortgage loan. Right, a mortgage loan would be a loan on a property. That would be a long-term loan. That will fall under non-current. Okay, then your other subheading, current liabilities or current. Okay, can you think of an example?
Yeah, debtors.
No, debtors is an asset. The other one. Okay, so trade payables. Use the right vocabulary. They prefer using trade payables, so let's use it. Trade payables. If you want, you can say slash creditors, but it's the same thing. Right, perfect. And then at the last line, just put a big total. Yeah, so, wow, the spacing is good. Just enough space. Yeah, total equity and liabilities. That's the big total. Right, so again, let's put numbers in. Alright, so for capital, let's make capital 80. Okay, and then where would that go? Next to equity as well. Good. Right, the mortgage, let's make the mortgage 30. And let's make the trade payables, it needs to add up 50. Alright, that would be, hold on, sorry, that doesn't add up. 80 plus 90 is 170. I put too much. Can you change the 50 to a 40?
The 50 to 40.
Yeah. Hold on, my maths. What is 80? 80 is here, so we need 80 there. So we've had 40. Oh, 50 was going to work.
Yeah.
Sorry, my mistake. 50 was going to work. Okay, and then 80 plus 80 is 160. Good. Yeah, so that's what you should see. Okay, and then that works out. Right, so that's the example format that they've described here. Okay, so the statement of financial position we spoke about, it covers assets and liabilities. The layout we spoke about non-current and current. We've covered that. There's a bit about accounting equation here which we need to look at. Anything else? No, that's the end. And there's a bit about capital. Okay, so two other notes. Two separate notes relating to this chapter. Okay, the first heading is capital. Where do you show the detail for capital? Capital will have a credit, correct, but where is the detail shown?
In the statement of financial.
Statement of changes in equity. Okay, remember you get three statements: income statement, balance sheet, and then statement of changes in equity, and that's for capital. Okay, so a note here. Okay, the textbook talks about two different layouts, horizontal or vertical. Either or would be acceptable. Obviously, we'll look at how they've tested it later on, and then we'll decide on what's the best approach, okay, how to show this. Okay, but what you can say under there, capital, small little bullets, capital for different businesses will have different accounts. Okay, so when we look at partnerships and CCs and companies, it'll be slightly different, but still the same. Okay, so capital for different businesses have different accounts. Who is capital for? The owners. Okay, there's the next point. So the next point, owners are entitled to the capital. It doesn't matter what the owners are. The owners can be partners, the owners can be shareholders, the owner can be a sole proprietor. Owners are entitled to the capital. Okay, how do we calculate capital? There's two different equations.
Assets equals owner's equity.
Okay, that would be the equity part of it. So you can say equity equals assets minus liabilities. Okay, there's the one equation. What's the other equation?
Profits.
Yeah, they're entitled to the profit. Good. So equity equals capital plus profits minus drawings. Okay, great. Right, and then the last bit, just put a separate heading, accounting equation. You've seen accounting equation right at the beginning of last year when you looked at accounting for the first time. Accounting equation, they've mentioned here, just as a form of analysis. Okay, the best place to start is with the accounting equation because that interprets your debits and credits and your increases and decreases. Okay, so the last point that you can mention there, all transactions can be analyzed according to the accounting equation. All transactions can be analyzed according to the accounting equation. Okay, they've given you a different consideration here just in terms of the disclosure, so the statement of financial position. Okay, so I'm going to give you two equations just to make this make more sense. All transactions analyzed according to the accounting equation, yes. Okay, so underneath this you can just write down a big word assets equal owner's equity plus liabilities as a formula. Yeah, they've drawn a little diagram here when they've shown you the two balancing, okay, in terms of a scale. It must balance, obviously, okay. Right, then underneath this, let's expand on it. Okay, so the word asset, do this. So you've got assets here, and then go like this, and then go non-current and current. Okay, and then equals owner's equity plus liabilities. Under owner's equity, you can go like this: capital, drawings, income, expenses. Okay, under liabilities, non-current and current. All right, so that's what you need to do just to sum up. Okay, because that shows all the components. Okay, so we're just splitting them up into their different groups. Okay, so for assets, split it into two: non-current and current. Obviously, assets, non-current and current. And that completes chapter 14. Wow. Actually, all these chapters are so short. The next one, 2 pages.
Sure.
Okay, but yeah, I think we can take a quick little 5-minute breather if you want to, just to refresh before we carry on. No, we still got lots of time. Okay. Because we've already covered 2 chapters already, sure. It goes quite quickly.
Yeah.
They're short. Right, soon we can start with assignment 3 even. Okay, we're almost there. How many do we need to do? Okay, we still need to get to 22. Yeah, so with owner's equity, you need 4 lines. You need 1 for capital, 1 for income, 1 for expense, 1 for drawings.
So it was
Capital, number 1. Income, 2. Expense, 3. Drawings, 4. Perfect, okay. And then liability splitted, non-current to current, and then that's it. That's the end. Chapter 14 completes. Yeah, so just remember that with assets and liabilities, timing is important. Okay, you get long-term liabilities and short-term liabilities. That doesn't apply to income. Income is income. Expenses are expenses. There's no time associated with this. Okay, another good summary. Nice.